Hi, welcome to the Market Alert for Thursday, the 10th of October 2019. Interesting jump in Bitcoin yesterday. No surprise really when you go back and look at the former Market Alerts where we talked about the Bitcoin market returning the greatest yield this year, and also consolidation phase of the current bull market. So Bitcoin actually jumped yesterday to a 3-week high near the 8,600, and this is the interesting bit here as the Fed plans new round of reserve increases. Now I love the language here, and the reason being is that they're not calling it QE4, it is QE4, and as it states here, which is quite ironic, that you've got the first rule of QE Club, don't call it QE. Well, it is nothing other than QE, and it is going to be perpetual QE as well, infinite QE. It's the only way they're going to keep this financial system alive. So that's what the Fed are up to. It's going to get worse going forward. We are going to go in recession, and Bitcoin is now seen as a place, as an alternative. It's about chasing yield as ever, and other alternatives, of course. So yesterday we see the market moving higher. The market didn't do a lot on Tuesday, still part of the consolidation, and then prices trading right up to the 200 MA. The 200 MA can be a resistance level as well as a support level once prices break through. So we need the market to actually break through this level and move higher. And in the 4-hour chart, you can see their prices again consolidating the during Tuesday, and then part of Wednesday. You can see prices holding above the 20-bar moving average. They close above the 50, and then we see the market moving higher. It's now sideways to lower. The buying has disappeared for the time being, so we need to see the market consolidate before moving higher and heading towards that 200-bar moving average that you see there. And again, you will need to see prices closing above this in order to move higher. In the 15-minute yesterday, a very interesting picture here. I'm just going to drag this over to the right a bit, just see if I can make the price bars a bit wider there so you can see them. The market's above the 200-bar moving average here, and then it comes back, then it goes back, and it comes back, and it goes back. But all the time you can see that it wants to get back above the 200 MA, which is why the two shorts there are struggling to move lower. And eventually you will see prices, even though they come back through the 200 MA there, eventually they drive through with very high volume on the news that the US are going to continue to print and keep printing more on the repo market as well, extended it to keep the banking sector with the liquidity it needs to function, and there you'll see the move to the upside. So once it got ignited, it certainly did move in the right direction there. Meanwhile, in the stock markets, I'll just go back to here, we can see that late today China trade headlines spoils low volume stock market party. As we said, this market's been moving up on low volume for a very, very long time, which means that it's being marked up and not traded up by buying coming into the market. And here we go. Let's have a look at the daily chart for Tuesday. The market reversing. Prices traded down towards the 200 MA again on during yesterday's trading session, and then came straight off it on the overnight, which we'll see in just a moment. So we've got this is I'm just trying to catch up here. This is the 9th. This is yesterday, and then this is the overnight market, which you can see we've already had a big range, and that's because of the trade talks falling apart with China yet again. Tuesday we saw some selling in the market, but you'll see on the up days the volume is low, and that's critical as well. So price is coming off that 200 MA. We'll look at that in a moment. Let's just have a look at what happened during the main event yesterday. So prices attempted to move higher off the DP level. They were just met with resistance, and we saw prices being sent down to the crucial area, the 200 MA, where we see the buying coming into the market and closing back above. So once we've got the shakeout out of the way, the market then is free to move to the upside and then sits above the 50 bar average, and then into the late part of the trading session also the 20 bar, so above the 50 and above the 20 there. So once it's got that momentum and everything's switched, the 20 above the 50 and the 50 above the 200. However, overnight prices fall out of bed, as you can see here. Big drop to the downside there. We've got 100, 200, 250, 300 point drop, and then the market tests, and you can see testing down here, and then before you know it, we're making a 76% retracement, all the way back down to another retracement here, around 62%, and then we double top here, and by some sort of miracle, the market is ignored completely what had happened during the statement, and has rallied back to be more or less where it was the previous day, i.e. On Wednesday. News. Let's have a look, see what we've got. So we've got Carney out today. He's out at 10:20. There's also a European policy meeting accounts. I don't know if Super Mario is speaking there or not. And then we've just got core CPI for the US at 130. So in the pound, there could be a bit of a movement at 10:20 a.m. So let's have a look at the pound, see what it's doing. It's still waiting for Boris's Brexit deal. Find the pound, there we go. Let's start off with the daily chart. Always start in the bigger picture, get an idea of where we are. So you can see yesterday the market finding support from Tuesdays and starting to move back up a little bit here, but otherwise in a bit of a sideways to downward movement there. And then yesterday the market sailing straight through the 200 MA with some selling, and then trading all the way down to 76% area, and then getting into a sideways area until the market comes back down to the psychological level that we have here, which is going to be the 122 level there. So $1.22, where the market's found a bit of support and is now currently just trading above the 200 bar MA there, but struggling a bit. So it's probably waiting for Carney to speak at 10:30, which will be over here in this area here. So keep an eye on that one. And again, still waiting really to see what the outcome of the Brexit deal is going to be. So in other news, the implied volatility moving back to the upside as 1673 as the Dow starts to fall apart. And as I mentioned in Monday's, that this market needs to correct. It's tired. It's got all of the hallmarks of correcting as well. But of course, overnight they've managed to move prices back to where they want them. And they've been doing this for a very long time now. If you actually observe the pre-market session with the futures market, you will see prices being brought back in the pre-market session, only to see the cash market, those that have actually owned the physical shares, selling and putting downward pressure on the market, looking and saying, well, look, if the Fed are going to start printing again and it didn't work the first time round, then I'm out of here. So that's what's going on in the stock market. Yield curve is interesting as well, because this has come back to minus 0.1. And eventually this will turn green before we go to a recession as well, as it has on previous occasions. And then Deutsche Bank as well. Keep an eye on this one as it's starting to fall again down to that 640 level, crucial level for this market. Okay, I think that is it, all caught up. And yeah, keep an eye on Carney for the pound. The Dow has just a little bit of news at one, but they're going to do the best to keep it moving to the high side. A lot of pressure on the downside in the cash market. Bitcoin has broken the back above the 8,000 level. Will need to consolidate and need other news in order to produce some decent moves. Keep an eye on the 200 MA in the 15-minute, 4-hour, and in particular the daily chart of this market. Okay, that's it. As ever, thanks for watching. See you in the next one.